Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 2nd of August 2019, so welcome everyone. Welcome to this Friday's afternoon session where we're going to have a quick look at the markets, a few of the charts, some of the charts that we looked at this morning, just to see how everything got along. But as always, before we do that, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and also of course our JFD website, and specifically our JFD research page here, where you can go in and have a look at different analysis that we do on a daily basis. So I believe you can find a lot of useful stuff here, so please do not hesitate to check us out. Yeah, for now, let's jump into the charts. The first one I want to touch on here is the S&P 500. Now, I looked at this one yesterday, and basically what I was talking about, some of these key support levels that we needed to see a break of those in order to kind of, let's say, continue shifting to the downside. So in a way, we got our nice break here below, and this is the level that I've mentioned, the 2,976. It broke the level nicely, went all the way to the downside here, sold off heavily, and the target for us, of course, is still this 2,913 level, but one of the levels that I was targeting here was the 2,958, but as you can see, the index overshot it by a little bit and kind of tested the 100 EMA here on the 4-hour chart, shown as the green line. So it acted as a good area of support, and then the index retraced a little bit, but still stayed in the red, heavily in the red. So of course, now what we're going to do here is certainly we are looking at the cash index right now. We are seeing a bit of well, some movement, basically stalling. It's stalling around near this 100 EMA, to be honest, again. So it's going to be very interesting to see how this is going to continue performing today, because if this slides again below this 100 EMA, then to be honest, this is where, like I said, this is where we will target this 2,913 level, which is marked by the low of the 26th of June. But in case we have a nice overshoot here, the good area for maybe the bulls to step in a little bit here, just maybe for a little correction, and that's the 200 EMA here, and that's approximately around the 2,900 level, maybe just slightly below that, a few points, but nevertheless could be a nice target here. So for now, of course, be careful. Like I said, we're looking at the cash index right now. We are right now slightly below the yesterday's close. So like I said, keep your eyes on this 100 EMA. If this continues to slide further, then yep, we could in a way revisit the 2,913 level, which is the low of the 26th of June. So keep your eyes on that one. And like I said, this 200 EMA also could be possible. In case this, let's say, reverses back to the upside. Now, again, one of the levels that you could keep an eye on is, of course, the 2,976. If we get a push above this, there could be a possibility of seeing maybe this one climbing a little bit higher. But still, for us, the more important level remains the 3,000, the psychological 3,000 level, because if we get a nice good push above that area, above the 3,000 level, then yep, we could maybe consider a possible revisit of the all-time highs near the 3,028 zone. So keep your eyes on that one. Jumping into another index, but This one is the dollar index, and you're looking at the DXY. Of course, this picture here, you can see that it, after hitting the finding resistance near the 98.93 level, it drifted to the downside. It kind of dropped below the 21 EMA, below the 20 SMA of the Bollinger Bands, and found good support near this level right here, near the 98.19, which is marked by the highs here of the 30th of July. So for now, we're going to be somewhat neutral because, of course, we are seeing a small rebound here, but to be honest, for us, let's say to consider the upside, ideally we'd like to see a push back above the 98.45 level before kind of aiming for maybe for this recent high here, or in other words, the highest point of this week near the 98.93. But probably this is something for next week, and in a way this could remain at current levels. But as you can see by the highlighted areas here, these are the levels that we're keeping a close eye on, because if we see a drop below the 98 level, now this is where it could turn out to be ugly for DXY, for DXY bulls, but then again, ugly only in the short term, because overall you can see this still the index is above it, trading above its upside support line taken from the low of the 25th of June, and yep, in a way, if we see a drop below the 98 level, then yep, we could see further decline, maybe towards this 200 EMA, or even maybe towards this upside support line for a quick test. So that's why, guys, we will only consider the downside if, or let's just say short-term downside, only if we see a drop below the 98 zone. And in terms of the upside, it's the 98.45 that we're keeping a close eye on. Jumping into a few pairs now, AUDJPY. Now, I talked about this one this morning, and basically it continues to slide, and we were still trading around here somewhere this morning, and you can see that it slid further. It dropped towards this 72.31 level, and just to kind of remind you what that level was, and this was kind of one of the levels that we're looking for, we're trying to find, and this is basically going back all the way here to the lows of June 2016. So basically near the lowest point of June, this is the level that I was talking about. So for now, of course, you can see that this area continues to hold. It will be interesting to see how this week is going to close, because currently looking at the weekly candle here, you can see that it's a total mess. I mean, there's a lot of yen buying here, of course, the risk off sentiment here, you can that's showing up. You can see that of course by the equity markets as well, and the whole safe haven currency buying. So look, like I said, AUDJPY, of course it is looking quite weak, but the only thing is that we are quite extended here even in this week. But if this travels below the 72.31 zone or 30, then well, in a way we could expect a little bit more declines, maybe going towards that 72 zone. So that's why for now, guys, it's of course it is quite tempting maybe to go and scalp this one, maybe back for a bit of correction here to the upside. But to be honest, given that there is a lot of concerns in the markets, of course due to the trade tensions here between China and US, so in a way this could continue traveling lower. But that's why we're gonna aim for the 72.30 level. If we see a drop below this, then yep, we will continue drifting to the downside, because if we see a drop below this 72.30, then in a way it could also push the pair below the S1, today's S1, and in that case it could be opening the path towards the S2, which is approximately around the 71.60. But of course before that we will aim for the 72 zone. In terms of the upside, to be honest, I mean, what you could do here is maybe keep an eye on some of these levels here, maybe one of which could be this one right here near the 72.85. A nice good push maybe could above it could potentially lead the pair maybe towards a bit of correction here to the upside. But even then, still be very careful, have your stop loss in place, and of course, just like I said, because this could reverse at any point to the downside. USDJPY, very quickly on this one. So of course, as you know, we did get the NFP numbers right now, and well, about an hour ago, sorry, and the numbers came out a little bit I wouldn't say the best, because I mean the non-farm payroll number came out it just bang on exactly as expected at 164K. The only thing is that the average hourly earnings came out slightly better than expected. So we maybe saw this initial reaction and a positive reaction in the dollar, but as you can see, the bears are kind of pushing it back down again. So that's why in this pair, in the USDJPY, I mean, given that the yen is still favorable, we could maybe see this one drifting to the downside. But to be honest, as you can see right now, that it's indecisive, because of course on one hand you have a weak dollar, and on the other hand, of course, the yen is slightly on the stronger side, but today is the end of the week, so there could be some yen dumping happening. So that's why this pair is kind of stuck here right now and trying to decide where to go. But of course, overall we are slightly oversold here on the shorter time frame. Ideally, to see a bit of correction here to the upside could be possible, could be great, I would say. But again, don't get your hopes up too much, because this in a way could continue drifting lower. As you can see, this today it found good support near this 106.60 level. This level acted as a very good area of support back in history, and for this one I probably need to scroll back into there we go. Yes, so I bet need to go back a little bit even more, because I believe that this is the levels of 2016, if I'm not mistaken. Sorry, no, 2018. So that's basically the low of the April lows. Yep, let me just quickly double check that. That's correct. So around the 10th and 10th of April lows, basically, that's what I'm talking about. This is where the pair found good support today, and you can see rebounded. And for now, we're going to be very careful with this one, because like I said, on one hand, it is quite overstretched to the downside. The only thing is that still, given the current situation, current risk-off trading environment, this could continue drifting to the downside. So for now, for us, basically, what we would like to see here is ideally maybe a correction and another slide to the downside, and especially breaking below this 106.60 level. This way, the pair would confirm a forthcoming lower low, and we could target further declines. But again, like I said, for now, be very careful, be very cautious, and probably keep this one for next week, and we'll see how this is gonna end the week and and we'll see if there could be a bit of correction here back to the upside. So let's see how this is going to play out. GBPCHF. So talked about this one this morning again also, and it was already trading lower, and it continues to drift lower, but found good support near its S2, and somewhere in between the S2 and this 1.1913 level that I talked about previously. And that level 1.1913 acted as a very good area of support here back around the 10th of October about 7th of October 2016. So you can see that I do apologize, that's not the date, that's not the 7th, the 10th. This is what I'm talking about. That's the 4th of 2nd of November, or in other words, actually the lowest point of November. So this 1.1913 level is the lowest point of November 2016. So that's why, guys, be very careful around here. For now, you can see that it kind of is playing like a nice good area of support. The only thing is that given that the pair is quite overstretched to the downside, we're also kind of hoping that we could see a bit of correction here to the upside. But for now, if we see a push and if we see a possible correction to the upside, for now we're gonna only target this level here, the yesterday's breaking point here near the 1.2020. We'll see how it's going to perform around there, because if it's going to hold, then we could see another round of selling and potentially maybe drifting below the 1.1913 level. So that's why be very careful. If we see a push above the 1.2020, then this is going to be our little neutral territory, because for us to get more comfortable with higher levels, ideally we would like to see a push above the 1.2127, and only then we could aim for a larger correction, because still we cannot talk about the upside because we're still trading below this downside resistance line. So that's why, guys, be very careful. If we see a push above the 1.2127, yes, we could expect maybe some higher levels, but only, like I said, in the very short term. And like I said, the upside could be short-lived because of this downside resistance line taken from the high of the 28th of May. GBPUSD. So it's stuck. It's still trading between these two levels, between these two highlighted areas. For now, we're not going to do anything. We're going to continue observing this one because it would be a little bit difficult to guess, because in a way, for us to maybe consider at least some upside, ideally we'd like to see, or I wouldn't say ideally, but initially we will aim for the 1.2170, 72 zone, something like that. If we get a nice good push above this, this would also place the rate above the 21 EMA here, shown as the yellow line. But ideally we need to see a break above the 1.2250 zone, and only then we will aim for a larger correction as well, like with the GBPCHF, because we're still below this downside. This a bit of a tentative one, but this downside resistance line taken from the high of the 3rd of May 2019. So only then, like I said, we will aim for this larger correction to the upside. In terms of the downside, in order to kind of aim for lower levels, we need to see a drop below the 1.2080. This way the pair would confirm a forthcoming lower low, and we could then aim for that psychological 120 level. And the last pair for this session will be the EURUSD. Very quickly on this one, so it's also stuck. It's not moving anywhere. Probably it could end the day like this, because as you can see, it tried to push higher today, tried to make a move above the 111 level, but kind of failed to do so. Of course, it did overshoot it a little bit, but quickly got back below it. So now it's basically stuck again below this 1.11. Of course, this doesn't kind of give a lot of positivity to this pair, because still, if it will continue trading below the 1.11, then there is a good chance we could see another slide back down towards the 1.1024 level. You can see this level here acted as a fantastic area of support this week, so in a way we could see this one sliding back down towards that area. And if, of course, if this gets broken, if that 1.1024 gets broken, then this would confirm a forthcoming lower low, and we could aim for that well expected and that level, which is really on the radars of everyone, the 1.10. But again, like I said, that's in the scenario if we push away from the 1.11, because if it continues to struggle to get back above it. But if it travels back above the 1.11, still the upside could get short-lived. Could be short-lived because of this little tentative downside line taken from the high of the 28th of June. And because for us we need to see a nice good clear break above this 1.1190 before kind of examining the upside here, because this way not only that the pair would be above this downside line, it would also be above its 200 EMA here on the 4-hour chart, and this could at least give some hope for the bulls to drive this one higher. So that's why, guys, for now be very careful. If we get a push above the 1.11 zone and then maybe a 1.1122, yes, we could continue traveling higher here, but only up until this downside line, and then we'll take it from there. If it holds again, we could see another round of selling, but if it breaks, then yep, we'll aim for this 1.1190, and if we get a nice push above it, then we'll start considering slightly higher levels. Okay, guys, I hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me on Monday, as always, my traders tea time as well, of course, and espresso in the morning. That's 6 o'clock GMT. For now, for those who are still trading, be very careful, be very cautious. For those who are finished, have a wonderful weekend. Of course, for those who are still trading as well, also have a wonderful weekend, and I'll see you all next week, guys. Thank you very much. Bye bye.